Before we wrap up, just a quick reminder. Everything shared in this video is for educational purposes only. It's not financial advice, and it's not a guarantee of future results. Trading and investing always carry risk. You can lose money. So, never trade or invest money that you cannot afford to lose. All examples and tools mentioned here are meant to help you learn, not to promise profits. By watching this video, you agree that SWP Trading is not responsible for any losses that may result from your personal trading decisions. Stay smart, stay disciplined, and remember, protect your capital first. Hey, welcome to SWP Trading. If you're here, you've probably looked at a trading chart before and felt completely lost. I get it. When I started, I didn't know what I was looking at either. Green candles, red candles, weird lines moving up and down. It looked like chaos, but here's the truth. Once you understand what's really happening on that screen, everything slows down. You stop seeing chaos and you start seeing logic. You begin to notice patterns. You realize the market isn't some monster trying to take your money. It's just a reflection of people, human behavior. And behavior, my friend, can be read, studied, and understood. That's what this entire guide is about. Not hype, not get rich quick. Just a clear, realistic path to learning how markets move and how you can move with them. So, if you've been watching videos, scrolling through trading apps, maybe even taking random trades that didn't work out, this is your reset. Right here, right now, you start over the right way. Let's strip away the noise. Trading, at its core, is simple. You're buying and selling assets to profit from price movement. That's it. You buy low, you sell high, or you sell high and buy back lower. But here's the deeper layer. Trading is not about predicting the future. It's about reacting to what's already happening. Most beginners fail because they try to predict. They guess, they hope, they pray. They treat trading like gambling. Real traders don't hope. They observe. They read the story price is telling them. Every candle on your chart shows a fight between buyers and sellers. When buyers win, you get a green candle. When sellers win, you get a red one. When neither side is sure, you get indecision. Small candles, long wicks, that's emotion. That's fear, greed, patience, hesitation, all printed visually right in front of you. Once you learn to recognize those emotions in the chart, you stop being emotional yourself. That's the first mental shift. Don't trade feelings, trade behavior. The euro against the US dollar, S&P 500 index, or even Bitcoin, each one moves differently. Each has its own rhythm and its own personality. Forex markets usually respect structure and time zones. Major stock indexes, like the S&P 500, react strongly to world news and overall market sentiment. Crypto, on the other hand, trades 24 hours a day and can move fast with emotion. Pick one, study it, stick with it, because if you try to trade too many things at once, you'll never develop real intuition, and that intuition, the one that comes from real experience, is what separates a trader from a gambler. So, where should you start? If you prefer calm and steady price movement, the euro against the US dollar is a great choice. If you want more energy and faster moves, the S&P 500 gives you that excitement without chaos. Just don't jump around. Make your chosen market yours. Now let's talk about your workspace. Open a free demo account first. That's where you can practice with fake money. No pressure, no risk. Once you're inside your trading platform, clean it up. Most new traders open their charts and see 10 indicators, flashing colors, and messy lines everywhere. Delete all of it. Keep it simple. You only need candlesticks, support, and resistance zones, and maybe one moving average line to help you see direction. Use a dark background that's easy on the eyes, and soft colors for your candles. Teal for buyers, orange for sellers if you like. Your chart should feel calm, not noisy. Before you zoom in, always zoom out first. Look at the bigger picture so you know where you are inside the overall trend. That simple habit saves you from trading blindly. Each candle tells a story. The body shows where price opened and closed. The top and bottom wicks show the highs and lows of that period. Green or light candles mean buying pressure. Red or dark candles mean selling pressure. When the candles are small, the market is quiet. When they're large, there's energy and momentum. You don't need to memorize 50 names like hammer, doji, or dragonfly. Just understand what the candle means. Was there strength? Was there rejection? Did buyers win or did sellers take control? Once you start reading candles like that, you begin to understand the language of price. Most beginners make this mistake. They try to learn every pattern, every strategy, all at once. You don't need that. You only need one simple and clear setup. Let's use the break and retest. It's powerful and easy to understand. Here's how it works. Price moves up and touches the same level a few times. That's resistance. When it finally breaks above that level, don't jump in immediately. Wait for price to pull back and test that same level from the other side. If the candle shows strength again, that's your confirmation. Now you can enter, break, retest, confirm, enter. That's it. If you master that one structure, you'll already trade better than most beginners who keep switching strategies every week. Remember, consistency beats complexity. Risk and money management. This part decides whether you survive or blow your account. Never risk more than 1% of your account on a single trade. If you have 1,000 euros, that means 10 euros of risk. That's it. If the trade fails, you lose 10 euros. No problem. Move on to the next one. If you win 2 trades and lose 1, you're still ahead. That's simple math, not emotion. The moment you start thinking, I need to make my money back, the market will teach you a hard lesson. Keep your losses small so your wins can compound. Trading is not about hitting home runs. It's about staying in the game long enough for your edge to work. And here's a truth most people ignore. Protecting your capital is progress. Every time you avoid a big loss, you're moving forward. Trade when the market is alive. That's when volume and movement create opportunity. For most traders, that means the London or New York sessions. That's when professional money is flowing. During quiet hours, especially in the middle of the night, price tends to drift sideways. That's when emotions take over. Boredom makes people take bad trades. If the market doesn't show your setup, do nothing. Seriously. Doing nothing is still a trading decision. The best traders aren't always the ones who trade the most. They're the ones who wait for the best moments. Every trade teaches you something if you write it down. After each session, take 5 minutes and note 3 things: what you saw, what you felt, and what happened. Did you follow your plan? Did you hesitate? Did you break your own rule? Over time, those notes reveal your patterns. Maybe you notice you lose when you trade late in the day. Maybe you see you win more when you wait for confirmation. That awareness is gold, because the goal isn't to be perfect. It's to get 1% better each week. Keep screenshots of your best trades and your worst ones. Study them like a coach reviewing game film. That's how you build experience that sticks. Here's a simple plan that works if you commit. Week 1, learn the basics. Mark key support and resistance levels. No real trades yet, just observe how price moves. Week 2, take 10 demo trades. Focus on timing and patience, not profits. Week 3, review every losing trade. Ask yourself why it failed. Was the entry too early? Was there news? Did you break your own rules? Week 4, if you've been consistent, go live, but keep your size small. Stick to your process, not your emotions. By the end of these 4 weeks, you'll have something most traders never build. Real confidence based on discipline, not luck. Now let's talk about the part that controls everything, your mind. Trading is mostly psychology. It's not about being smarter than everyone else. It's about staying calm when everyone else loses control. When a trade goes wrong, don't panic. When a trade goes right, don't get greedy. Stay centered. Follow your plan. The market rewards emotional control, not emotional reaction. The calmer you are, the more clearly you'll see what's happening. If you can manage your emotions better than the next person, you already have an advantage, even with the same strategy. Remember this line: discipline is more valuable than prediction. All right, let's bring it all together. Keep it simple. Pick one market, master one setup. Risk small, be patient, journal everything. You don't need luck, you need structure. Start small, stay consistent, and learn every day. If you want free tools to help you trade smarter, visit swptrading.org/tools. There you'll find a trading checklist, a position size calculator, and a journal template, all free. And remember, trading is a skill. You don't have to master it in a week. You just need to start the right way, protect your capital, and build discipline one trade at a time. See you in the next one.